Hi, welcome. Anton Kreil here from the Institute of Trading and Portfolio Management. I'm joined here today in London with Hichem Djouhri from Dubai, who has joined the Institute as a senior trading mentor. Hichem has literally been one of the best performing portfolio managers in the Middle East North Africa region for the last decade, and in fact for the last 7 years has been the best performing asset manager of the region. So we've come to have a sit down and have a chat and catch up and ask Hichem a whole bunch of questions about his career. Welcome, Hichem.
Thanks. Cheers, Anton.
Cheers.
Thank you. Thank you for that kind introduction.
Yeah, no worries. So welcome to London.
Always a pleasure. It's great to be with the guys, great to be with the mentors, and it's fantastic to be part of the Institute. I think all the work that's been done so far is great. It's an establishment that I'm proud to be a part of.
Cool.
Yeah.
So in the intro there, I did allude to your career, which has been pretty insane. Mm-hmm. You kind of, this kid that came from nowhere and became the best performing asset manager in the Middle East North Africa.
It has been a roller coaster of a ride, I suppose. Yeah. From university out in New Brunswick, which is sort of a small town in Canada, making it back to Dubai, where I essentially grew up. Started off as an equity derivatives trader for a couple of years before I moved to the buy side. I got hired away by an investment bank there. Essentially, started managing about $500 million, which is a decent amount for somebody who's just starting out in the industry. Performance has been solid. I mean, driven by an institutionalized investment process, essentially, and that's something that you develop over time, but it just becomes part of you. Yeah. So essentially, the focus has been on the MENA region for the majority of my career. So we look at about 14 different stock markets. The mandates are mainly long only. So I've managed funds that look at the whole MENA region. Other funds that are focused, that are more country specific, be it Saudi Arabia, be it the UAE, be it Qatar, Kuwait, and so on and so forth. And on top of that, there are discretionary mandates that that are managed on the behalf of either institutions or ultra high net worth individuals. Those strategies are more tailored. They could be either a dividend strategy, they could be tactical, shorter term trading strategies as well, but essentially all within the same region. So it's an interesting market, the MENA region. I mean, as the first thing that people think of when we talk MENA, they think oil. They are markets that are highly correlated to oil prices, but if that was the case, I'd be a commodities trader and I'd only trade oil. Why would I spend my time looking at other companies? The idea here is that opportunities are abundant, especially in a market where you're talking about volatility that's about three times the VIX. So you have volatility is a trader's best friend or his worst enemy if you don't know how to use it. Essentially, I guess that's a part of what attracted me at the Institute. It's teaching people how to make volatility your best friend. So essentially, going back to oil prices, the MENA region has benefited from this $140 oil prices. But even when we take a step back, post-crisis, let's say from 2009 till about 2011, the markets were completely dead. The liquidity had been dried up. Pre-crisis, markets were going up, almost on a daily basis. It was an easy wave to ride, and then came the crisis, which made it a lot harder for people to find opportunities. Liquidity was not there. Margin was available, but yet people didn't know, or traders didn't know essentially what to do with it. What that essentially did to traders is it drove them to look at the fundamentals. If at the time, if you come into the market at 2009 and you're looking at companies and there's no liquidity in the market, essentially you're going to be sitting on that position for quite a while. But if you're picking companies in which you are proud to be a shareholder of, and companies where you have high conviction, either in the management or the fundamentals, more importantly, the latter, then a couple of years later, those stocks are going to perform quite nicely, and that's essentially what happened. So positions that were built early on went up 300-400%ers earlier on. And the market, what happens is that you have institutions or smart money that comes in, builds position, sits on them, and then the retail comes and drives the market higher for them. So essentially, that's what we've done.
Cool.
And bring me to my next point about retail, but we'll talk about that.
Yeah. So it's when you were talking about how the funds are set up in terms of mandate, you have a bit of a catch-22 situation, clearly, with correlation in the region. So you have a long-only mandate.
Correct.
But you have high correlation to commodities like oil across the region.
Absolutely.
How do you manage that process? How do you get a significant outperformance like you have in the last 7 years in the region when you have oil prices spiking and collapsing, going up 100% and falling 50%? How do you manage that and get performance?
That's a very, very important and a very interesting question. It's actually been the jewel or the main driver of the outperformance of the portfolios and the funds over the past few years. So there are two ways that we look at it. One of them is, what are the companies that are driven by domestic demand? Stocks that are not correlated to oil prices. The market may be, but there are, take for example telcos. Telcos are going to grow as the population grows. Data is more expensive there than anywhere else. Those stocks are going to outperform tremendously. And that was the case. Domestic stories, not driven by external factors like oil prices. That's one part of it. The other part of it is that with oil prices, people tend to, if oil prices drop, they will tend to short oil-related entities right away, particularly in Saudi Arabia. However, the truth is that a lot of those companies benefit from a lower oil price because it's the raw material. Their margins expand.
Right.
Markets miss that completely because the focus is just on that correlation. So essentially, when you have a market that's driven by retail investors, and I'm talking almost 70% of the market is made up of retail money, which is completely different to sort of more developed markets outside. What that does is that they're essentially driven by either news. They're highly speculative. We're talking about trades that they're going in and out every day. A lot of misuse of margin, where they end up getting margin calls constantly, and there's this element of a herd mentality where they'll read a blog about a stock that's performing well. Suddenly you have everybody jumping in on it.
Sure.
When this company is a loss-making entity.
Because it's quite retail driven, right?
Absolutely.
Yeah.
Exactly. So that benefits the institutions when they know, when they see that trend, because if the retailer are driving the market lower, all that does is it makes fundamentally strong companies a lot cheaper.
So the retail end up providing liquidity.
Absolutely.
At fundamentally rock bottom prices.
Exactly.
Yeah.
And they tend to come in and buy when the market is just too expensive. And at the time, we're just sellers of the market saying, thank you very much.
Sure.
Now I'll sit back, because eventually it's just going to come back around. And it's a cycle that's happened time and time again. And referencing back to the performance of the funds, if you look at sort of the track record on a chart versus the benchmark specifically, you will see this beautiful negative correlation. As market falls, either the portfolio stays flat or is going up a little bit, and just continues to do that. The funds and the portfolios, this strategy continues to outperform the benchmark, driven by this, understanding the fundamentals. That's what it's about.
Cool. So you've obviously had incredible performance. You've managed to get the negative correlation and smoothed out those returns over many years. Times where there's problems and you see problems coming. You mentioned volatility being 3 times the VIX on average in the region. How do you hedge your portfolios? Do you use options to hedge? Do you trade volatility in any way? How do you do it?
Absolutely. So there's a few ways that we can hedge in that region specifically. You can either short a stock. You could buy a covered call. You can, let's call it, park your money in dividend-paying stocks that are not essentially of high interest to retail investors, but yet have strong fundamentals. So you're putting your money in a stock that's giving you a 5-6% yield, with quarterly payments. So you're sitting back as this cash is coming in, and with the compounding effects, that money is just gonna balloon after a while and add a lot of alpha to your portfolios. That's one part of it. Another element is you can put on positions on the commodity itself. If I'm long the market, I can be short oil prices and benefit from that correlation trade there, essentially. Furthermore, because we're looking at one region, not all markets behave in the same way. So if I'm long, for example, Saudi Arabia, I may be short another market and vice versa. And you'll find that a lot of money that's invested in the region tends to flow from one market to another quite frequently. So you can play those against each other. So correlation trades are of significant importance.
Okay, cool.
Yeah.
So you've joined the Institute.
Yes.
And you've actually mentored quite a few people already, outside the region and inside the region.
Correct.
The guys that you've been mentoring, obviously, this is the first time for you mentoring retail traders and not mentoring professional traders like you've done for many years inside the industry. What do you think the key differences are between the way retail traders approach the market and professional traders? Because you hit on a point about the way retail traders trade in the MENA region, and they always seem to sell at the bottom and buy at the top. Clearly that's an issue. But the guys you've been mentoring, what have you picked up on so far? Have you seen any major issues that you believe retail need fixing across your mentoring programs? How does it compare to professional traders?
I think the number one issue is about having an investment process.
Okay.
The lack of any discipline in your investment means you're just a cowboy. You're shooting everywhere, hoping that one of them is gonna be a bullseye. Probability of that happening are slim. You may make one great trade, but if you're failing 9 out of 10 times, you're not going to perform. That's the main focus. And with the mentees that I've been talking to over the while since I've joined the Institute, these guys, the main thing that I applaud them for is their love for learning. They're here to improve their trading skills. Already they're getting out of that retail mentality by understanding that there's something that they don't know. They want to develop, they want to learn from an institutionalized sort of method of investing. And that's what we spend most of the time talking about, is how to have a process, how to apply it, how to generate trading ideas, how to protect yourself in times when volatility goes up drastically. How do you benefit from that? On top of that, I think that's the key difference.
So having a systematic process that's basically repeatable.
Absolutely, and on top of that, having a systematic approach is one part of it. The second part is really focusing on the fundamentals, as opposed to focusing on what your friend told you, or what you heard from your neighbor, or what you've read in the paper. Something that you've read in the paper.
Or what a chart did 5 minutes ago.
It's just too, or it broke a certain line. That means it's going to go to the next level. But based on what? It's not a process, essentially. So that's what we focus on: investment process, systematic, and fundamentals. Really digging into the company, understanding what is this business that you're buying, essentially. What's driving the economy?
So what's interesting about that is from our perspective, a really typical outlook of retail traders from a guy on the institutional or professional side. It's a common thread of not having a systematic investment process for retail traders globally. In the Middle East, in my opinion, retail traders actually have a much tougher job, because, as you alluded to, the correlation effects with commodities in their region they're so strong, and their entire lives as individuals, whether they work for a corporate or run a business, the guys of that region, their entire future life and net worth is dependent on commodities. And I think a lot of these guys go out in the region to try and learn how to do other things, to diversify their strategies, diversify their wealth in some way. And a lot of guys get caught up, getting sucked into the kind of like retail trader mentality of how to do things. In the region, how do guys get access to diversifying their net worth internationally, and how should they go about it?
Well, that's. I think you've hit the nail on the head with that one. The correlations are very high. People are very dependent on commodity prices, not only in the stock markets, but throughout the rest of the economy. No matter what their careers are, there's the trickle down effect, positive or negative, depending on where the commodity is trading at for an extended period of time. And having diversity or being diversified is essential in any portfolio, be it the way you're managing your life altogether or your investment portfolio. Diversity is key. And looking at just one region, if that's the focus for an investor, then they need to be very, very well versed with the companies that are listed on that exchange, with the different drivers of that economy. Otherwise, you're going to need to look at markets outside, especially when you're talking about a MENA market where the industries overall are quite limited. The market is not extremely deep, neither in liquidity or in the number of listings across the board. So you don't have a lot of exposure to different industries. Even though the businesses exist in the economy, they may not be listed. So looking at markets outside is definitely something that we encourage. I think it's something that we do as institutionalized investors is push retail to look outside and not only look at just other stock exchanges, look at the commodity and look at the exchange market, the FX market as well, because you're a dollar pegged economy, but foreign currencies are affecting you as well. That a stronger dollar as we're living today is hurting you effectively.
Sure.
Not when you're going shopping in London, it's not.
Sure.
With today's pound. But it is when you're doing business with China, it is when you're doing business with Japan, if you're buying items from there and vice versa. So this is why it's important to be able to understand the fundamentals of different markets, commodities, look at exchanges outside, and also understand currencies and how they affect investors.
Right, so retail traders across the world kind of have that non-systematic process. The guys in the Middle East have the similar thread. Every retail trader seems to have this problem.
Yes.
With the guys in the Middle East having this problem with correlation, with oil, with commodities, access to other markets doesn't necessarily mean because you have access, you're going to be good, okay?
Absolutely.
So any of these guys, if they really wanted to, could actually go out there, open a retail brokerage account, access the markets very quickly, trade currencies, trade stocks in the US, stocks in Europe, stocks in Asia, Australia, wherever. But it doesn't necessarily mean they can actually do it, right?
They lack one thing. It's an investment process.
Yeah.
Whether looking at markets outside or international markets, or if they're just focusing on the MENA region, if there is no investment process, the results are going to be the same.
Okay.
If you don't understand the fundamentals, if you don't have a systematic approach to generating ideas and having a worldview, you're going to be lost. On top of that, the region is driven by global markets. So between the U.S. and China and Europe's GDP, you've covered essentially most of the world's GDP. Yeah. There's a driver there. No country is an island on its own. They're all related, and essentially, if you're not following markets outside, then you're completely lost. Even if you're looking at the MENA region. So if you want to be a good MENA trader, you need to understand what's happening.
You need to
globally.
Understand the world, basically.
And if you're looking at the world, then you've just expanded your investment horizon significantly.
Exactly.
And that's where the real value is.
Okay, cool. So from a mentoring perspective, you've obviously had an incredible career, still a very young guy, so you can kind of connect, which is why we brought you on board. You can also connect with the younger guys and the older guys because you're still only in your early 30s, right? Here's a question completely from left field.
Okay. You're known for those. So,
yes.
So.
In your career, you've obviously been quite successful, but there's clearly been some shockers and bad situations along the way. Otherwise, you just wouldn't have learned and you wouldn't have got the returns over the many years you've had.
Absolutely.
Give me something from left field.
Sure.
Give me a shocking trade that you've been involved in and you've completely lost your shut.
I will. There was one that I can never forget. So for me, it's always at the top of my head because it's a trade that I might as well, if I could paint it, I would, and then just hang it on the office, just a chart of how this one went. So there was a telco listed in Saudi Arabia, which was the darling of the market. Essentially, it was a crown jewel across all of my portfolios. It was a very solid company.
What's the name?
This was Mobily.
Who?
Mobily is the stock. Etihad Salat is the other name it's known as, and the stock was, had I think at the time it was almost a 7% yield, annual, very strong, positive cash flows, predictable earnings that were just growing quarter on quarter, and suddenly they reported one quarter a couple of years ago, almost 3 years ago now actually, that they had falsely reported their earnings for the past year and a half.
Oh, that's death.
So
that's the killer.
Yeah, that's it. I mean, the stock did not go to zero, but I don't understand why it didn't go. It stayed a little bit high, a little bit above that. Luckily, I was able to sell. I mean, that's when you sell at market as opposed to selling using a limit order. You're just trying to get out as fast as you can. You will take any loss because you don't know what this company's looking like.
It's just about what you can get out for.
At what price can I sell at? Just get me out. So we're on the phone with our brokers on Bloomberg, just trying to message, and everybody's trying to do the same. And what's difficult about that region is you have limits every day. So the market cannot, circuit breakers, precisely. The market cannot fall beneath 10%. So if you don't get out in the very first few seconds that the market is open, forget about it. For the rest of the day, there are just offers and no bids.
Right.
1 day, 2 days, 3 days. So, I exited with a 30% loss, which was very painful. And mind you, this was a stock that was across...
That's a core position across all portfolios.
Across all portfolios.
My God.
So nobody was spared.
Okay.
And what hedge? Because this was a no-brainer, essentially. That was the toughest lesson for me, is that audit your numbers, look at the fundamentals, understand the company, sit with management often, and there's no such thing as a stock that's going to remain great forever. Stories change, and you need to adapt very quickly.
Well, there's a big lesson for retail there.
Yeah.
It happens to professional traders too, right? So I think a lot of retail traders can take heart from something like that. The young guys, you can, because of your age and your successes so far, the young guys can actually, it's easy for them to relate to a guy like yourself than a much older guy. And even the a middle-aged guy, you've got the great experience and they can understand it. But for young guys, understanding stuff like that is really key, right?
It's what's been great about the mentoring programs is I've developed friendships with the mentees. I mean, they're guys that come from such diverse backgrounds. They're sitting all over the world. A lot of them are in the region, some are outside, as far as the Caribbean, and it's this cultural meet over that sort of meets and agrees on how do we invest. You forget about everything in between, and that's what really matters. And what makes me very proud is to see guys come in with just a thirst to learn and a zero background and leave following a proper investment process. Then they're at a level where we can talk about a company as if I'm sitting with a colleague of mine at work, or I'm chatting with you about a stock and we're discussing and we're ripping this company apart, challenging each other, and that's the level that they get to. They'll suggest things that I may not have thought of, and I sit back and I applaud. I'm like, well done. This is where I needed you to be. Now you can go out on your own and make money for the rest of your career, essentially.
Yeah, it's pretty amazing. Like when these guys come through the online education, that's part of it, and it's only part of it. The reason why these guys as well get to the end of mentoring programs and they can actually sit down and chat to a guy like yourself as a peer in the industry, and you feel like you're with a peer in the industry, is actually because of the mentoring programs themselves.
Absolutely.
Having a guy like yourself oversee everything that these guys are doing for 12 weeks. So Hichem, I'm really proud to have you on board. I'm looking forward to many more great things in the future from your mentoring programs.
Thank you. I look forward to it as well.
We've got our conference tomorrow in London.
All right, the big seminar.
Yeah, exactly. We have our conference tomorrow in London, and can't wait to get started.
Fantastic.
Cheers, man. Cheers.
Great one, Anton.
Cool.
Speak soon.